What an incredible week we have had so far. It started on Sunday with a pretty amazing UFC event at the White House. I gotta admit, I don't normally stay up that late, but it was worth me going to bed late. What a great show. And then this week we have seen the housing market or mortgage rates really respond pretty quickly to two big things. First was the MOU, or talk of the MOU, the memorandum of understanding between the U.S. and Iran, and then Fed Chair Warsh as he ran his first Fed meeting and then made his remarks afterwards to the public. So a lot of news to talk about this week, so please pay attention. We're going to spend some time on each of these topics, plus some other housing reports that came out. And it's something that I've been hearing a lot from people in the industry and really outside the industry, just people in general. AI's impact on housing. What is AI's impact on housing going to be? I got some really interesting thoughts on that. Something I was thinking about while I was working out. So I'll elaborate a little farther in here and then we'll take a look and see where interest rates are. But I'm so excited for this week's housing market update. And we start off with the big three. Prices are steady, no real movement. Despite interest rates being elevated, home prices have stayed steady really across the board, especially in Oahu. Inventory is up. Again, we are near 10-year highs for inventory in Oahu. And in certain parts of the country, we are seeing that as well. Although I will say the Northeast continues to lag in housing. There just isn't enough inventory to meet the demand up there. And rates are steady. We'll get into that, like I said, a little later. So here's some of the headline topics we're going to talk about. We're going to talk about the peace MOU that was signed between Iran and the U.S. We're going to talk a little bit about the Fed meeting this week. And no, they did not raise rates. They kept them the same. And really what moved the market with regards to that meeting, pending home sales really crushed expectations for the fourth month in a row. Here, we're going to also talk about AI, what its impact on the housing market is going to be, and where we are at in the AI stages of development. I have a really interesting analogy we'll talk about. Home builder sentiment, oh my gosh. These guys can't catch a break, and I think that's something I'm going to talk about in the future is how do we make housing affordable? Well, you know what? It starts with the home builders, quite frankly. And with the home builders, it's making it easier for them to build homes and less expensive for them to build homes. The only way home prices are going to stay low or not outpace inflation is if we make it easier and less expensive for builders to build homes. And then let's talk about why you should get pre-approved. You know what? There's no cost to getting approved. We'll get into that. And then FAQ Friday, I get this every time. What is in my mortgage payment? We're going to talk about that. And then VA rates, again, steady, but there is hope. And yes, hope is not a course of action. You've heard me say that a million times, but I truly believe that there is a light at the end of this tunnel, and it is not a freight train coming to whack us. All right. And the U.S.-Iran MOU was signed this week, and actually President Trump signed Wednesday at the G7 summit in Versailles. And it's a 14-point framework deal. And there's been a lot of kind of false news coming out about it, but really this isn't a peace deal per se. There's no treaty, no agreement, but it is an agreement to negotiate over the next 60 days to meet some hardline requirements so that we can continue in a going back towards a peaceful environment in the Middle East, and also to keep those oil prices down. But we're going to break some of these points down, some of the key provisions here. First, we have an immediate ceasefire. Now, this probably is one of the most volatile aspects because there's more than just two players in this game. There's Israel, there's Hezbollah. Israel, they have their own goals in this entire conflict, in this entire region, and it is their region. We're not part of that region. We're trying to maintain the stability and the flow of oil going through the region. But Israel is an ally of ours, so we have to work with them, and they have to work with us in this case. The big thing is the Strait of Hormuz is reopened, and there is traffic going through. There has been traffic going through, but more traffic going through the Strait of Hormuz now. But that is super volatile as well. The naval blockade is lifted. We're still going to have naval forces. I cannot believe that we're pulling our naval forces out. I just don't see that happening. But we will probably step back. They'll still be in the region, though, because as President Trump has said, if Iran goes and does something that to basically go against the terms of the MOU, we're going to drop bombs on them. And we have to maintain that pressure, because how many times have we been told by Iran that, hey, we're done fighting, only to have them lob missiles at us, Qatar, Bahrain, and whatnot. So naval forces will still stay in the region, I would imagine. And the other fourth thing is the Treasury is issuing immediate waivers for Iranian crude oil exports. And the frozen Iranian assets are going to be made fully available, but they will not be available all at once. Once Iran kind of meets some metrics, then it shows that they are truly involved in this process. We will make these frozen Iranian assets available. Another thing that is good for the Iranians is a $300 billion reconstruction fund. No, it is not funded by the U.S., but this is money that will be basically funded through the Gulf countries, which is a big false piece of news that I've seen throughout the mainstream media. U.S. taxpayers are not paying this. And then nuclear, this is kind of the big one. This was our big goal here, right? We do not want Iran to have nuclear weapons or nuclear capabilities that could become weapons. We don't want them to buy nuclear weapons. Iran has pledged not to build nuclear weapons. This is something that we will see develop over the next 60 days. But here's some of the things. We got 60 days. The nuclear issues are not resolved. Ballistic missiles. President Trump has mentioned that they should have ballistic missiles. I'm sure Israel and actually every country in the Middle East is not too happy about that. And I think one of the bigger things is if they receive money, they cannot funnel that money to their terror networks, Hamas and Hezbollah. So we're in a slippery slope. I think really at any point over the next 60 days, we could see tensions flare up. We could see oil prices go back up again. Right now, the news has been mostly positive. So kind of what has been the market response to that? This is what you really, obviously we care about what's going on over there, but what is the impact here? Hey, Brent crude oil prices were over $100 at certain points in this conflict. They are now under $80 a barrel, and that's good. We are at a 1-month low for 30-year fixed rate conventional mortgage rates. 10-year Treasury, it peaked at 4.68. It hasn't come down quite as much as we would like, but that's because we need to see some more movement on the inflation front. But 4.43 on the 10-year Treasury. And you know what? Since the day of signing, oil prices have dropped over 5%. That's good news. Some of this really has impacted what the Fed's decisions were coming out of their meeting. And we'll get into that here in just a second. But I think what we need is some more time to see the dust settle on the MOU, to see both sides really working towards peace in the Middle East. Before the war started, conventional rates were below 6%, folks. It seems like eons ago, but conventional rates below 6%. We were in the mid fives for VA rates. I was locking folks in the low fours, 5/1 adjustable rate mortgages. So, if we can see through this period, this next 60-day period, and make some meaningful progress in peace, we could see inflation, oil prices come down, inflation comes down, mortgage rates come down, and we could see a really good bump as we get through this summer PCS and moving season. Again, some of the key concerns moving forward, the nuclear program remains unresolved. There is a lot of political opposition, even within the United States, even within President Trump's own party, that, hey, we're being too soft on the Iranians. But really, I think this is a good measured response and about as much as you can expect, considering that we haven't gone in and just completely annihilated Iran, and we haven't had boots on ground in Iran. So really, I think there's a lot of political opposition even within Iran. I mean, you see with the Iranian team in the World Cup, you have the two different sides that are really juxtaposed against each other within Iran. You have the Iran Revolutionary Guard Corps, IRGC, versus the Iranian clerics, and there's a lot of consternation between those two, and still a lot of instability, I think, within Iran. Fed hike, that is a risk. Nearly half of the Fed members expect that we will see a rate hike this year. So we'll get into that here in a minute, but that is something that we need to keep an eye on, especially if tensions pick up again in the region. War deficit spending, we're spending a lot of money right now keeping these forces in place, and any future forces used to maintain peace in the Middle East. Really, and around the world, that's going to drive bond prices down and yields up. And, this pressure to restock our military supplies is not going to help with inflation. And then the oil recovery, it's not linear. Strait of Hormuz is open. There are still mines within the strait. We expect full commercial traffic to pick up within the next 30 days, but there again are obstacles that remain. Full LNG, liquid natural gas output restoration is going to take about a month as well. So really, until we see a full restoration of oil supply from the region, again, 20% of all oil comes from the Middle East. Oil price volatility will continue, though really not as bad as it has been. And again, closer to home, what does this mean for you? Hey, rates are trending down this week, and really don't wait for perfect. While rates are higher, you have fewer buyers, and actually mortgage applications dropped this last week, a little lower than what they have been. So some people are sitting on the sidelines, and for those of you that are in the game, for those of you that are pre-approved, there is more inventory, and when there's more inventory, that means there's more choices and more bargaining power for you. Don't wait for perfect, because if you wait for rates to come down, now you're competing with a lot more people to buy really an even more limited number of homes. VA buyers, a VA loan is still the best loan on the planet. Less DTI restrictions, less fees, lower rates. VA loan is the best loan product on the planet. The next 60 days are going to be really telling on whether or not we see interest rates as we go into the fall really get back into the sub-6 range for conventional. There is a risk of a Fed hike. That's something that we got to keep an eye on. But again, nothing that you control. You control your spending. And, for me, I've been talking to a lot of clients lately. I've had a lot of leads coming in. A lot of people want to buy. They're afraid of what the numbers are. You got to know your numbers. We're going to get into that here in a little bit. Now let's talk about the new chief in town, or should I say the new Fed Chair Warsh, President Trump's hand-picked successor to President Trump's hand-picked first Fed Chair, Jerome Powell. And some key takeaways from the meeting that ended on Wednesday. One, they held rates steady. That was pretty unanimous between the Fed funds rate between 3.5% and 3.75%. It was unanimous, and we have held there since December, basically December 25. So this entire year, we have stayed steady. Dot plot. The dot plot is basically the Fed members' projections for the next year or next coming years. They do this every other Fed meeting on where they see the Fed funds rate as we progress throughout the year. 9 of 18 projected at least a quarter-point hike in the remainder of 2026, but not all voted. Matter of fact, Fed Chair Warsh didn't give his recommendation because he doesn't believe that any of this makes an impact. But I will tell you this, it impacted interest rates yesterday. They shot up. Almost half of the Fed members saying that they expect at least one hike this year. Fed Chair Warsh really made it clear that he does not think that the Fed should be impacting the markets. All right, the market should be impacted by the economy, i.e. jobs and inflation, not by what the Fed says. So he's really going to dial back some of the rhetoric, I think, from the Fed and really make it a more market-driven response to the Fed, and really not a market-driven, make it more of the market responding to the economy, not responding to what they believe the Fed is going to do as it pertains to the economy. Inflation is still elevated. And we're at CPI, it was at 4.2%, which is the highest since April of 2023. PCE, which we will see the next report, and it lags by a month, was at 3.8%. So really, inflation is still high. With the drop in oil prices, that's great news, but we won't see that for 1 to 2 months its impact on inflation. There is a lead lag in that. And some of the conference highlights we'll get into right now. Again, no surprise that the Fed didn't raise the Fed funds rate, but Fed Chair Warsh's comments really kind of show that, again, there is a new chief in town, although it's kind of interesting because Fed Chair Powell is still on the board. But the statement was much shorter, 130 words versus a 300 plus. They've removed forward guidance language. He's basically, again, saying that, we don't want to impact the market or what the Fed says. The Fed should be reacting to what the economy is doing. The market should react to the economy as well. Again, Fed Chair Warsh did not participate in the dot plot. He basically says it's not helpful. In the conduct of policy, he's going to be reviewing how the Fed communicates to the public, because there is this, we all want transparency, but again, we don't want to put the cart before the horse, and I think sometimes that we've done that with the Fed really just speaking and projecting things that really didn't make a lot of sense. He was very clear though, 2% inflation is still the goal, and he basically said flat out, we're not doing our job if we can't get to 2% inflation, and we are going to make that happen. So that's tough talk. That's first meeting, laying down the standard, but we'll see what happens coming up. AI, he did say that AI productivity gains will help ease cost pressures over time. There's a reason for optimism of inflation being impacted positively, i.e. coming down because of AI. So we'll get into that here in just a minute. He's also commented that there will be an overhaul in Fed operations in the future. He's creating at least 5 different task force, talking about how they do press conferences, the dot plot, the meeting structure, minutes, and I will tell you this, he wants to make sure that we're measuring the right things. Some of the labor reports that we get, the BLS, the Bureau of Labor Statistics jobs report, how accurate is that? We complain about this all the time. It is not accurate. And so what are we measuring? Are we measuring the right things? Are there better and more effective ways to measure inflation and the job market? Because what we're doing right now has not been very accurate in many cases. So really excited to see what the Fed does moving forward with their task force. In summary, with regards to the Fed meeting, again, interest rates on Wednesday after the meeting shot up, and it was largely the reaction to the dot plot where the Fed members, 9 of 18 Fed members said they expected a rate hike this year. Again, I agree with Fed Warsh. That's hogwash. All right, we don't know. We have no idea. We need to let the dust settle from everything that's going on, and continue to make Fed policy better and more proactive versus reactive. Let's get on now to new home construction. And this new home construction report for the month of May was negative in every way possible. Look at this, starts. This is a big one. Housing starts dropped 15.4%, down 8.7% year over year. Permits, all right, a sign of future building, down 0.7% month over month. And then you look at completions down 8.1% month over month and down 14.26% year over year. Gentlemen and ladies, this is not good news for builders. We talk about affordability, and it is an issue, but if we're not building new homes, we are not going to help with the affordability across the nation. It is a law of supply and demand in full effect with the housing market. We need more homes. And permits, they are a sign of future construction. And if they keep dropping, we are never going to come to a time where we have affordable housing because we have such limited housing supply. Let's take a look at the other housing or the home builder report that came out. This is a home builder sentiment. Home builder sentiment decline. We saw 1 month go up to 37 in May, now back down to 35 with current sales expectations dropping from 40 down to 38. The home builders are citing affordability challenges, no surprise, and rising construction costs as the key obstacles to home builder sentiment. And again, this is something that the Fed or the government really needs to look at how can we basically incentivize and make it less expensive for home builders to build homes. If they're not going to build homes, we are never going to meet the affordability requirements, because home builders are in this business to make money. Yeah, they want to increase the amount of they want to increase home ownership, but they want to make money. And if they're not making money, they're not building homes. And that is something that we need to fix. Now let's look at positive news in the housing market. The pending home sales report for the month of May. We saw a big spike. Last month, it was like 1.7% increase in pending home sales month over month. This month, 3.8% month over month. Year over year is up 4.8%. Up from 3.2%. So that is another positive movement for pending home sales. Again, this is in the month of May. Yes, in the middle of this Iranian conflict, we are still seeing pending home sales go up. Again, I mentioned earlier that mortgage applications were down this last week, but people are still buying homes. There is still a strong demand to own a home. And, again, 35% of all home buyers last month in the existing home sales report were first-time home buyers. So anybody who says home ownership isn't a goal, it's not the American dream, no, I'm not going to say they ain't American. I'm just going to say they're wrong. All right. And really, again, going back to the affordability piece, the index of 100 is 100 for the pending home sales. 100 is, hey, we have 5.5 million home sales expectation. Any amount below that is, the index is going to be lower. And while we have seen for 4 months in a row, all right, pending home sale, the index has gone up. They're at 76.8 for the month of May, and at 4.17 million projected current sales. That's good. We're still below the 5 million needed again, and that goes back to affordability. If we don't have more homes, then I think our pending home sales are going to stay below 5 million, and we don't have enough homes. We just don't have enough homes. And you know what? While new home sales and existing and pending home sales are different, those new home sales become existing home sales later. They become pending home sales later, and we are at a deficit in that respect. So now we're going to talk about AI in the housing market. AI is every other sentence on social media, and gosh, I'm bombarded every day by AI. You can't get away from it, and you know what? You're not going to get away from it unless you go live in a cave, and I'm sure AI will come and get you even there. But if you have a smartphone, you're using AI. Everything that we use these days is AI related. But here's what you need to know with regards to AI and the housing market. And, again, don't take this as gospel, but you know what? I gotta believe there is going to be an impact on the housing market, and it's not going to be a negative one. One of the biggest impacts of AI is if AI takes my job, how do I pay my mortgage? That is a very real and valid fear, because you know what? AI is going to replace some people in the job market. And those people who own homes and are now jobless, they're not going to be able to pay their mortgage. But I will tell you this, those numbers aren't going to be as big as you would think, and you will not be a statistic if you use AI to help you in your business. And if you evolve, just as we've evolved throughout the Industrial Revolution, the computer revolution, that's really the big thing. You must evolve. We must evolve. I'm evolving right now. It's part of my job, but you know what? I ain't gonna take my job, and we'll get into that too. But really, the biggest impact I think AI will have on housing is job displacement as it automates roles across various industries, especially in the admin and finance and creative work environments. If you have no paycheck, you're not making your mortgage payment, so defaults will spike. But again, we are also at historic lows for mortgage foreclosures and short sales. And you know what? What moves markets? Fear. Fear alone moves markets. When we have fear, buyers freeze, sellers wait, inventory stalls, and we're kind of seeing that right now. That is not AI related, however. I like to think of an analogy with Apple. for where we're at with AI right now. Right now, we're in the iPod stage. Remember when the iPod came out? It was great for music. It ultimately replaced all those little MP3 players, all those downloads that we were doing unauthorized. Not that I ever did that. Wink, wink. All right, but the iPod changed music, but nobody predicted what it was going to lead to. And then in 2007, we get the iPhone. We're not even at the iPhone stage of AI yet, folks. The iPod is ChatGPT, it's Claude. We're just in the infant stage. All right, the iPhone is going to be a leap. We're starting to get there now. We got agentic AI. But really, what happened? What did the iPhone replace? It replaced the BlackBerry. It replaced standalone GPS units. I just found an old GPS unit that we used to have to plug into the cigarette dispenser in the car. Remember those? Gone. Remember point and shoot cameras? Gone, largely gone, because the iPhone and certainly other phones have really taken the place of those handheld point and click phones that we used to have. And we're not there yet. And here's the other thing, all right? The economy adapted. With each change, the economy adapted. And guess what? What is the future? Artificial general intelligence. We're not there yet. We'll get there. But just as we have all through the development of the iPod, the iPhone, we'll adapt. The economy adapts. And those who adapt will survive. They not only will survive, my friends, they will thrive. So let's take a look, are there at-risk jobs? Absolutely there are. Routine data entry and admin roles. Not only are we gonna use AI, we're already using virtual assistants that are providing cheaper labor. In many cases, I know my virtual assistant is actually using AI to help them do their job. Eventually, you know what? It's funny, my virtual assistant is a real person. She has a real company. And if she doesn't adapt to AI and start using AI to basically streamline what services she provides, she's going to be out of business because she knows that she'll be replaced. But if she learns how to use AI and her team knows how to use AI, well, I tell you what, they are going to be able to do more with less people and less time. But people in routine data entry, call center, customer service jobs, basic content writing, copy editing, just basically admin type stuff. Those people are going to be replaced. Who's more protected? Hey, trades, plumbers, electricians, HVAC, healthcare. We are going to online healthcare. There, people are using Claude for their healthcare, but really, we still need nurses. We still need physical therapists. Real estate and mortgage professionals, they're not going away, folks. I don't like talking to a bot. I don't like talking to a bot. It's not that I don't trust a bot. A bot hasn't lived my experience. That bot doesn't understand what I do and my feelings and emotions when I buy a home. They don't have that experience because bots don't buy homes yet. But we still will have a job, but we have to learn how to use AI, right? Educators, coaches, and mentors, all right? We still need those human beings. The ones who will thrive are the ones who use AI. Again, sound familiar? And then high judgment, creative, and strategic roles. So people who are going to lead AI into the next generation, those people are going to be more protective. Again, they're not going to bury their heads in the sand. The people who survive or are more protected are the people who are not going to bury their heads in the sand. They are going to take advantage of all that AI has to offer. All right, and here's why housing is gonna stay strong. These are 6 good reasons why housing is gonna stay strong. 1, supply is still constrained. All right, AI ain't building houses, it's just not. We're 3 to 4 million homes short. And AI doesn't build houses. Humans build houses, and humans buy houses. All right, demand is demographic. Millennials, baby, man, they are hitting their peak home buying range, and 72 million people can't be automated out of wanting shelter. You can't live in a virtual house and expect to not get wet. You're gonna get wet. New jobs are gonna emerge, all right? The internet, remember this, internet killed travel agents. All right, you don't see too many travel agents. Matter of fact, to set up my last trip to Italy, I didn't use a travel agent. I used ChatGPT, and it was amazing. I highly recommend it. You use it for the next trip. AI is going to create new industries. It's going to create new earners or new opportunities to make money. The people, again, who don't bury their head in the sand but see the opportunity. And there are a lot of people out there. I know those millennials and Gen Z, they're licking their lips at the opportunity that they have. Those ones who aren't going home and crying to mom that they don't have a chance in this new era. You know what, mom and dad know there's a chance. You just gotta take advantage of the opportunity while it's there. And you know, government is gonna intervene where they need to make sure that the job market does not get decimated by AI. But quite frankly, I just don't think that's gonna happen. And again, if history is any indicator, all right, we will adapt just as we always have. By using the tools that are becoming available to help us really, make our lives better. Now, iPhone's made my life better. The problem now is getting off the damn iPhone, right? That's a lot of stuff, huh? Aren't you excited? I'm excited. I love this stuff. All right. It's funny. I literally came up with this AI thing while I was working out this morning. I was just kind of thinking where we're at in this whole AI economy and where we're at, and it just went back to the iPod, the iPod to the iPhone to whatever's next. So yeah, and I use AI to help me kind of put my thoughts into words and things that I could share with the audience. So anyway, just my 2 cents here. All right, hey, what are the benefits of getting pre-approved? There's no cost to getting pre-approved. So a lot of people think there's a lot of misconceptions, especially among first-time home buyers. 2 things. 1, there's a cost to get pre-approved. There is no cost to get pre-approved. And getting pre-approved is going to hurt my credit score. Actually, it may go down a point or 2, but a mortgage credit pool is different than any other type of credit pool. A matter of fact, your credit score may go down 1 or 2 points, but that's very temporary. And getting your credit pulled, what it does is it shows real time where you're at financially from a credit standpoint. And let's remember, your credit score is your financial report card in life. You really need to know where your credit score is. All right. Knowing your credit score helps me. All right, helps me with you and your budget and your ability to buy a home, because it's super important that you know what your budget is. And that's another thing I see a lot of first-time home buyers and people who have never bought before. They have no idea what their budget is. They have no idea how much home they can afford. And they have no idea what goes into a mortgage payment. We'll talk about that in a second. All right, they have no idea. And they go online and they look at these online calculators, and oftentimes these online calculators are wrong because they're computing the taxes wrong, or a lot of times they're computing the homeowner's insurance wrong. So it's really important to know your budget. It's really important to know what your credit score is. And once you get pre-approved, then you can go make an offer with confidence. And your offer is going to look stronger with the seller when you're pre-approved, not pre-qualified. Pre-qualified typically means your credit not everything has been validated by the lender. Your offer is much stronger when you're pre-approved. Closing goes by faster. Here's a big difference. You're pre-qualified, you might get an offer accepted. But you know what? You are going to slow the process down because you haven't gotten everything. You haven't gone full open kimono with your lender. You got to be open kimono with your lender. All right. You got to show them everything. And if you don't give your lender your taxes, in most cases, your divorce decree, your child support decree, your W-2s, your pay stubs, your bank statements, and you just got a pre-qualification, you are slowing the process down. You're probably going to lose, up to a week or longer in a 30-day process, and certainly on the mainland, a 20-day process, a 21-day process. So it's super important that you are not pre-qualified, that you are fully pre-approved. And when you are pre-approved, you've got leverage. You understand your budget, you understand your buying power, and you can go in with a sense of confidence when you submit your offers. So super important. The benefits of being pre-approved are real, and they will help you buy a home. Now, I get asked this question a lot. The FAQ Friday is, what's included in my monthly mortgage payment? Well, your mortgage payment consists of 4 things that are going to go to the bank in most cases. And the abbreviation is PITI. It's principal and interest. The principal and interest go directly to the bank. When you buy a home, when you first buy a home, most of your payment is going towards interest. Just remember, that interest is tax deductible at the end of the year, but the majority of it goes to interest. And the rest of it goes to principal. All right, the principal is basically goes to pay down your mortgage. That's the PI piece. The T is your taxes, your property taxes. All right, they are paid. They are not a separate expense. They are paid as part of your mortgage payment. In most cases, and really with every VA loan I've done, taxes have been a part of the mortgage payment. And insurance, the PITI, the I piece is your homeowner's insurance. Now, a lot of people think they have a separate homeowner's insurance policy. No. Your homeowner's insurance policy, you pay for it up front when you buy the home. All right, you pay your insurance in advance, and then every month you're making a payment that is partial that goes to your escrow account, and that basically ensures that the bank, which has your loan, is able to pay your insurance when it comes due the next year, and it makes sure that your property taxes are able to be paid when it comes due. In Hawaii, that's every 6 months. So your mortgage payment consists of 4 things: PITI, principal, interest, tax, and insurance. Now there is an A piece, PITIA. The A is your association dues. All right, those are not part of your mortgage payment, however, but they are paid separately to the property manager. And in Hawaii, a lot of people, there is this big shock when they see homeowners association fees upwards of $750 a month. The big question that you need to ask when you're looking at a home is, what do those fees cover? Those HOA fees cover? In some cases, they don't give you much. In some cases, they give you a whole bunch. So you really need to understand that A piece, the PITIA piece, not necessarily a part of your mortgage payment, but it is part of that monthly payment that you're going to be making. All right, that A piece goes to the property manager, though. So understanding the full payment, not just the mortgage portion, i.e. the interest and the loan amount, but understanding what your money's going towards really is important when you're making offers. That's why it's super important that you not only get pre-approved, but you discuss with your lender what the total cost of home ownership is. And that's what we do here at The Broker, folks. And we're at the end. Whew, man. All right, rates. You can take a look right here. Really, interest rates, they started to drop this week. They shot back up on Wednesday based on the Fed meeting, or the results of the Fed meeting, in particular the dot plot. They started to come back down a little bit on Thursday. Again, Friday is a holiday, Juneteenth, so the markets will be closed. And typically when rates go, it's just the way it is. Typically when rates go down on the day leading into the weekend, I typically see rates go up a little bit that following Monday. But next week is a big week too, because we have PCE, Personal Consumption Expenditure Report. That is the Fed's favored measure of inflation, and that report will come out next Friday. And the following week we'll see the jobs report for the month of June. All right, folks, that's all I got for you. That's all. That was a long all, but that's what I got for you this week. Have a great weekend. And oh yeah. By the time you're seeing this, knock on wood, I will be a grandfather for the second time. My daughter is at the hospital right now in a process of doing all those things that the doctors do to make sure she has a healthy baby. All right, we'll talk to you later. Aloha.